All right, so we're going to have a look at US 30 this morning, all right? And first and foremost, let's go and have a look, a quick glimpse at what's going on in the world, all right? A quick glimpse at what is going on in the world, all right? It's Monday. It's June the 10th already, yeah? Don't sleep on this year. It is June, yeah? June. Woo. That's half of the year, yeah? Already. Shouldn't be 2025. Yeah. Nothing red fold at the moment. Lots of orange folding news today. So maybe we'll have a calm day of trading. Maybe not. Who knows? I don't know what news events are happening outside of scheduled events. Remember, this is scheduled news, but the world is still ticking over with events and things that may have happened over the weekend, etc. Okay, and all things have an effect on the markets. All right, things can affect the markets that are not scheduled news. All right, as you can well understand. All right, so I am looking at US 30, and as you can see, I'm adjusting my charts and I'm having a wriggle. Let me make this as big as possible. Tell you what, give you guys maximum screen. All right, let me see something. There you go. All right, so this is the US 30 market, and I've zoomed all the way out, and it's on the 1 week chart. Let's get something underneath here. I've zoomed all the way out onto the 1 week chart. All right, now why do I do that? I do that because I want to see exactly what's going on with this market. Now we know this market has been bullish. All right, now what we spoke about on Thursday or Friday, I can't remember, was the fact that I hopefully encourage you guys to understand that you have everything you need to start making money in the markets in regards to strategy, in regards to understanding these markets, understanding where and how you can get into trades, etc. So you kind of have what you need, all right, in regards to that. Like, you have the tools are there. Yeah, so if you've gone into a mechanic's garage, there's enough tools there for you to do the thing. Whatever you need to do, you can do it. Now, what you're lacking, more than likely, is all up in the mind, okay? Because, this trading thing goes against human tendencies. What am I talking about? Let me mute this, in fact. To what human tendencies I'm talking about is I'm talking about greed. I'm talking about fear. I'm talking about anxiety. Yeah, I'm talking about, all these things that you believe, no, that's not me. I'm not this person, not that person. But if you're not this person or that person, you're not human. We're naturally greedy people. Like as human people, it's about self-preservation. Yeah, because we want to preserve our way of life. We want to preserve our position, all types of stuff. Okay, and this is what these markets do. It exposes, it shines, it magnifies. And it shines a light on these traits and some dark traits, some things that maybe we don't want to acknowledge exist. It shines a light on those things. Because the strategy that I'm going to show you this morning is the same strategy I showed you on Friday, and the same one I showed you on Thursday and Wednesday and Tuesday and Monday, and going back for however long. So it's either two things. It's either you're stupid, which you're not. I know nobody here is stupid. All right. Or there's something else that makes this trading thing a little bit more difficult than understanding that you're waiting for an indication, correction, continuation, from understanding that we buy in a discount and we sell in a premium, from understanding that the markets have certain things that they don't like to see, understanding that the markets move in waves, understanding that imbalances must be closed, understanding that when we see candlestick zones and we see strength and speed from a swing low or swing high, that this area is a point of interest. Some people call it an order block. Some people call it, we understand there's multiple names that people sit at home and want to create, 1,005 different names for the same thing. We understand that this game is a game of managing risk. Okay, you could flip a coin. Okay, just take your coin out of your pocket and flip a coin, and after a while, the numbers are going to balance out. After a while, you're going to do a certain thing, and it's just about, can you manage your risk so you can get to the point when you're winning? Because when you flip a coin, it's not necessarily that you're going to go heads, tails, heads, tails, heads, tails. That's not necessarily the case, is it? You might go heads, 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 then tails, tails, then heads, then tails, tails. Do you understand? So the issue is, let's transfer that. Let's make that relevant. Loss, loss, loss. Win, win. Loss. Flick again. Win, win, win. Loss, 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 loss. Then win. This is what could happen. All right. It's only when you get to larger data sets, when you flip that coin enough times, hundreds, thousands of times, the numbers should balance out to 50-50. Unless you've got a funny flip or you got a funny coin, the number should balance out over time. Okay. But the reality is what's the relation? What's the relation? What am I kind of, what's the similarities? The similarities are you've got to survive in trading. Yeah? Lose. Now, if you was going 50% in risk, that's you're done, mate. Off to the showers. Yeah? Later. Yeah? Lose. Well, if you're at 30% risk, you're done, mate. Go home. Free trades, done, over with. Okay? If you go lose, win, but you're willing to lose X amount and your reward's only going to be half, you're risking one to make half, well, you're not going to survive in that instance either. You want to be in a position whereby you can trade with an edge, yeah, that you've got a slight edge that you like. And that slight edge, in my opinion, is a huge edge, what I teach you. So you've got an edge. And then you're managing your risk that even if you have a bad run, lose. When you win, 1 to 3, 1 to 4, 1 to 5. Yeah? Now, controlling this is a separate thing. So what controlling this is like I spoke about, is understanding that there are certain things you shouldn't do. Let me give you an example for myself, all right? So I don't have to point my finger. I can point my finger back at myself. I have a terrible habit. Not a habit. Let me not say that. It's something I'm trying to stop completely, and it's getting much better. That if I'm in my trading zone, because sometimes I'm not trading, there's certain months that I'm not on trading because I try and do, I've got other things to do, and sometimes trading consumes a lot of my energy. So I might be on it hard trading in 1 month and then take my foot off the money, off the thing, put some money aside, whatever it may be. All right. Now, when I'm driving, I'll be driving my car and I've got my MT5 open because I'm in a trade. And I'll find myself at the lights, like looking at another entry, like, yeah, boom, I'm going to enter there, boom, 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 doing this. Yeah. Now, for a few reasons, it's nonsense. I mean, I'm driving. It's one. Do you know what I'm saying? Yeah. Like, 2 is the markets are not going anywhere. Like, I don't need to be trying to get in another, you know what that is? It's in the air. It's like I'm feeling like I'm going to miss out. It's that FOMO energy. It's that fear of missing out. Like, oh my gosh, there's a new trade coming and blah, 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 blah. And I don't want to miss this one because this is going to be the one. Or, another thing is you can get an addiction to trading. And let me touch on this. Like, I feel I'm kind of addicted to, I love trading. I love the markets. I love marking up charts. I love getting in a trade. I love managing my risk. I love trading. Yeah, just me personally. I don't know if you guys got the bug yet and you just can't, I love it. And that love, that passion for it can make you overtrade, can make you forget that this is ultimately a business. When you get past the I love it bit, this is ultimately work, business, like something to be taken seriously. So if I'm taking it seriously, why am I trading whilst I'm driving my car? Whilst I'm operating heavy machinery? Yeah. Why don't I chill out, sit down, zen, settle myself, and then trade? This is about the mind. Now, don't get twisted. It has happened a lot less, but there's times I found myself doing it. All right. Now, there's times when you guys are going to be trading, and I said, wait until the candle closes before you hit the button, and somebody's going to hit the button early. I know. Because it's like, you're so excited. Your emotions take over. I just hit the button. And then when I look back at it, so people have sent it to me before. They've sent to me and said to me, oh, Jay, I'm in this trade here. I said, what time did you get in? I said, they said, yeah, I got in at 9 o'clock. I'm looking at it. I'm like, can't see it. Yeah, you might be in some sort of profits right now, but I just can't see how you've got in based upon a strategy that I've taught, that I teach, unless you've got in extremely early. Unless you've done something else, which has got nothing to do with the strategy. Yeah. Now, the fact that you're in profits is irrelevant. Yeah. A broken watch is correct twice a day. Yeah. I want to see someone turn around and say, rah, I'm in drawdown or I got stopped out. But when they show me how they got in, I say, bro, there's nothing wrong with that trade. There's nothing wrong with you getting in that trade. Unfortunately, you just, is what it is. That's much better than me looking at someone's trade and be like, I don't get it, bro. I can't see where you got in. I'm on a 1 minute, which you shouldn't be on a 1 minute necessarily if you're starting off, you're not comfortable. And I still can't see how you got in. Let's have a look at these markets right now, US 30. The market was bullish, yeah, making higher highs and higher lows, higher highs and higher lows. You can see over here to the left, if we look left, that previously we had this, high over here. The market broke that structure. Boom. Breaking up here. Yeah. Have a look. Yeah. Boom. Showing like he wants to go even higher. Hence the reasons of this track here, this trend. Yeah. That the market's maybe trading within this yellow range. Okay. Because the way I'm looking at it is that if we were still, better word, in this blue track, we pinged. I'm wanting to see a pong down to this blue line. But evidently the market started to accelerate from this blue track and we pinged. We didn't pong as far down, all the way down to here. Let's actually have a look at the percentage of where we turned around. I'm pulling out this impulse from here to here, all the way up to this little level here. Round about the 50%. Didn't quite get down to 50% unless I haven't drawn it correctly. It's tight enough. Near the 50% area. And we've had a reaction that actually broke the previous swing high. So therefore now, when I'm drawing my lines, can you see? I've taken in this data point here. Have a look. This data point down here and this data point over here. And I've pulled out a parallel line. So I'm now very interested in this yellow track. Okay. Now, at the moment, we're in this little red track, which is a smaller range. But I'm very interested in this. Is this market going to push up to this yellow end? Or are we doing something else? Because we broke this structure. Yeah. Which is giving me it's giving me the hint that maybe higher high, higher low. We want to make a higher high, which we have made a higher high. So at the moment right now, when we're sitting in this consolidation, this is consolidation, guys. This is accumulation, consolidation, sideways action. They all equal the same thing. They're all the same thing. This market here is going sideways. Okay. The market only does one of three things: bullish, higher highs and higher lows; bearish, lower lows and lower highs; or sideways, equal lows and equal highs. Now, when it was coming down here, making lower lows and lower highs, it was bearish. If you asked me, over here, what's happening with the market? It's a bearish market. As in, on that time frame, it's in a bearish leg. It's pushing down from this red area. And I'll be thinking to myself, yep, we're making our run down to here. We may still be making our run down to there. However, it seems that for whatever reason, the market got down to this price point here, about 37,250, around that little price point over here. Okay. And decided, have a look, that it was scared of going any further. It said, you know what? We got down here, Jay, but now we want to make some higher highs and higher lows. So at that point, don't get twisted. This is US 30. This range from here to here is a big ass range. Yeah, it's not no joke range. It's a big range. I've got something selected here that I don't want. I don't know. I'll work it out in a minute. Let's reset something. Let's reset the charts. All right. And it decided to start pushing up. Yeah. This is a 4-hour time frame. We can see some clear higher highs and higher lows. Now, look, is what it is. We don't know whether it's elections, it's this. We don't know whether there's some sort of reason why this market said, you know what? It doesn't want to pong all the way down to that red level. Yeah. It's going to go sideways, or it's going to push back up, but maybe better way to describe it, up to that previous high. Okay, and have a look how as it pushed up, as it's pushing up, closing imbalances on its way, coming back down here, tapping into imbalances, pushing back up. Yeah, as it's pushed up all the way to this, back up to this equal high. Okay, relative equal high. and then started to have a reaction from there. Yeah. So therefore, this market is going sideways. It's not trading outside of this orange box. You see? Now, let me explain a few things. When this market was pushing up to these equal heights, to these highs over here, I'm going to be concerned because let me pause this. By this time, even when we get down to here, as soon as this market starts to come back up, I can draw this orange box. Yeah? Pretend you can't see this stuff. As soon as this market starts to break structure, I can say the market is trading within here and here. As soon as it starts to push up in here and doing some stuff up here, I'm like, wait a minute, the market, this is the playground. This is the pitch. Between this high and this low is the pitch that we're playing on. Until it starts to break out down here or do something, that's the pitch. So therefore, when it came up here to the top of the pitch, can somebody tell me in the back of my mind, what am I thinking? Maybe it's better if I rewind this. Can somebody tell me in the back of my mind, when this market gets up here to the top of the pitch, what am I thinking?
That it might grab some of the liquidity above there.
Yeah, maybe. That's a good one. That is one. It might grab the liquidity. But overall, what am I thinking?
That the price is expensive. The market's overbought.
And then what may happen from there?
An indication. A bearish indication.
Bearish indication. That's what I'd be thinking. In fact, I'll give you A+. Yeah, not to bread the champ, but the reality is yes, I am thinking that possibly it may want to grab some liquidity here. Look, this level here isn't necessarily an equal high. So if this was some two solid equal highs, I would be more on grabbing the liquidity. But there is also liquidity over just mountaintops as well. So there is always liquidity above any mountaintop or any valley. So yes, that's qualified. But one thing I'm definitely thinking is I'm thinking to myself that if this is a range between this orange box, then down here would be the bottom of the range, which would be a discount where I want to buy from. Look, buying from, winning, buying from, winning. And then this here would be the top of the range. And I'll be thinking to my back of my mind, boy, I'm interested in selling. Yeah. So when it got up to the top of that range, I'll be looking for, have a look. Indication, correction, continuation. Let me say that one more time because somebody didn't see it. Yeah, I'm going to say it in my accent as well. Yeah. You ready? I'll be watching this market pushing up here. Yeah. If I'm wicked and bad, I am showing you on the 4 hour just for effect. All right. I would have drawn my lines in here as well. Why did I draw my line like this? Somebody answer apart from Jason. Why did I draw my line in like this? Does anybody know why I drew my line in like this?
Touching the last point before the highest high.
There you go. I need to touch some data points. Good morning, Jiva. Touch some data points in here, but definitely touch the last low before the highest point. Because that is giving me like a guide, a track. If I wanted to, I can hold control on my Windows machine and I can pull out an absolute parallel line that is going to give me a general track of that bullish energy. Can you see? I think it's fair enough to say, look, price was trading within those 2 yellow lines. That's just me pulling out a parallel line. That's not me sitting there with binoculars going, okay, let me move it a little bit more angle. That's just generally me saying that's the energy. Because now this becomes the last low. In this instance, it's actually a 4-hour low. So it's not even a joke low. It's not a little joker. It's not a little joke 1 minute low, 3 minute low. It's a 4-hour low. For all purposes, a swing low. When I see that, have a look. That level broken and then corrected and continues. This is pretty close. It's pretty tight in here. It's pretty tight in here on a 4 hour. On a 1 hour, this is the closure. On a 4 hour, this is going to be a first indication. But it doesn't matter. Same thing. And then I see it correct and then continue. Boom. I'm in because I'm in for a sell from an expensive price. I'm ticking boxes. Tick. Is it expensive? Tick. Has it broken? Has price broken outside of the track? Look, it was in this track all this time. Do you get what I'm saying? The train was running on this track all this time. Then all of a sudden you see two of the wheels of the train outside of here. If I was you, I'll start stepping back from the track. I'll start taking cover. If you see the train's been running in this track all this time, all of a sudden you're like, whoa, bro, there's 2 wheels off the track. At that point in time, take a big step backwards. In fact, get away from the train tracks, because that train could be doing something else. And this train indicated, corrected, continued. If you don't want to take that one here, indication, correction, continue. This is on a 4-hour time frame. On a 1 hour, like I said, we will get our entry about here. And this is what's so powerful about the strategy. Now, let me ask some simple questions. Does everybody on the call get this at this point in time?
Yeah.
Or better still, better questions. Anybody in the call not get this at this point in time? Are they still a bit lost? That's probably a better question. I know we've lost a couple of people. Yeah. If you all get this, then all I'm going to say to you is this. The same strategy. I can find an entry here on the 1 hour because it's the same strategy. In this instance, this market came down to here. Look, this wick again, look, this isn't a close for me under this wick. I'm sorry. Let me move this down a little bit now. This isn't a close for me. This is a wick that I wouldn't be entering this trade here. All of this wick stuff. It's all sideways. It's a bit wicky. Yeah. This possibly could be a close. It's quite tight. Still very tight to these wicks. I'm not going to lie to you on a 1 hour time frame. It's still quite tight. Yeah, but let's imagine I took it. Well, that would be the indication. That would be the correction. This candle here would be my entry. Okay. This dropped down again to my 15-minute time frame. Remember, this isn't one I made earlier. So it's not necessarily like, this is just me looking generally. Have a look. I'm on a 15-minute time frame. I'll be drawing my lines in same way. But in this instance, have a look. I'd have to try and get my line, because now I've zoomed in, I'm getting more data, more information. I'd have to try and touch this little level in here. This level in here is my last low before this highest point. Ugly, but it is what it is. This level in here is my last low before this highest point. I would be waiting for a closure below this level. This is a closure below this level here, but the market keeps going down. So it's still in this indication phase. Goes actually all the way down to here as a wick, then comes back up here. Now I'll be thinking to myself, okay, I'm ready. Now I've got my finger on the trigger, waiting for 15-minute closure below this level here. That's what I'm waiting for. But it doesn't come straight away. Look, comes down here. Starts doing the hokey cokey. My finger's still on the trigger. The only thing I'm looking for is that, you see this from this market came and closed down here. This structure can't come back up here and break this level. If it does break this level and then comes back down, then we start again. I need another indication first, then correction and continuation. Now I'm just waiting for that continuation close for me to hit the button, because it's come from up here and it's pushed down here. That's this is the indication leg. And all of this sideways action, because it hasn't closed, hasn't retraced and then closed below that, this is all still part of that indication correction energy. So it comes down here. Look, I'm waiting for a closure below this guy here. Let me make it a different color so we don't get confused. Pink. All right, it's not a great color. Let's go green. All right. The market sideways. Look, even if you hit the button here, if somebody said, no, Jay, and they got in early, look, you ain't achieving nothing. Market's doing the hokey cokey, going backwards. You're in the red, it's going forwards. You're in the green. You don't want to be involved in this. This is a mess. This is why we wait for that closure. Let me tell you something. Somebody whose psychology, whose mind isn't right, was trying to take this trade on a 15-minute time frame. Let me tell you something. You know what they did? They hit the button here. They saw that come down there. They just hit the button. They didn't wait for the close. If they was taking on a 15-minute time frame, they just hit the button here. Because their psychology, their FOMO got the best of them. They've been waiting for so long, they just couldn't wait to hit the button, and boom, they hit the button. As soon as they hit the button, look where we was at. This person's in the red. This person's pissed off as well, because he or she knows that they should have waited for a closure below this level. Now this wick comes down here. This becomes the level I'm waiting for a closure below. Whoops. Yeah, this becomes the level I'm waiting for a closure below. It's like it's tunneling. It's tunneling. It's like someone's got a little drill. It's like we're trying to get through the whole wall to break in the bank, but someone's just got a drill, and every so often they're tunneling a little bit further up. It's not big enough for me to get through. I can't go in and lick the bank because somebody got took a 4mm drill and they got a little bit closer to the room where all the money is. I still can't get in. All right, all of this energy here can be attributed to correction, correction, correction. Have a look. As soon as man got his closure below, it was this wick. This wick tested it out. This little wick tested it out. This little wick even came and took the piss and tested it out. As soon as I got my closure here, I could, on this time frame, said, okay, I'm in, placing my stop above the correction. Oops. That's my aggressive entry, is my stop is above the correction. Because look, this whole energy of, this is a bit of a different case because it's fraffing about a bit, but have a look. This was your indication. This was all correction. And in this instance, this time frame, that was your closure. That is your strategy right there. Placing your stop above that high would be an aggressive entry on this time frame. All right. This would be the safest energy up here. Have a look. After all of that fraffing about, only when we got a closure down here did this thing start to move. Moved. Boom. When it moved down here, then we got a correction again, as we know the market does. Every time it breaks structure, corrected, moved again, boom, corrected, moved again, boom. This is why this is the strategy, because if you didn't wait for a closure, if you got excited anytime, you'd have been going backwards. And depending on where you place your stop, like here, if you had somehow gotten in here early, I don't know where you would have placed your stop, but if you placed it over some little minor little correction here, you'd have got stopped up. Okay? And again, 5 minute time frame, I can drop my time frame down 5 minutes. Let's go again. This is why I said that is a playground there. You guys, I think, is small enough. Yeah? It's small enough to play in. Have a look on a 5 minute time frame. Let's see if we can find a 5 minute entry that's different to the one that we saw. No. This is all wick below this level. So wick. I wouldn't say we could do. There is probably a smaller entry on a 1 minute time frame, but I'm not going to show. I'm going to show you. I'm going to show you. But it's the same strategy. This is my point. My point is it's the same strategy. Now, obviously, there's different nuances on the 1 minute time frame from the 5 minute time frame, especially when it comes to actually synchronizing with time. Understand what I've just said. Synchronizing closures with the actual time. Because here on a 1 minute time frame, there is a closure every 1 minute at a 9:11, 9:12, 9:30, 9:40, 9:15. But on a 5 minute time frame, there's only a closure at 9:05, 9:10, 9:15, 9:20. On the 15 minute time frame, there's only a closure on 9:15, 9:30, 9:45. But now that 15 minute closure at 9:15 is also a 5 minute closure. Because 5 goes into 15 3 times, nice and cleanly. It's also a 3 minute closure. Because 3 goes into 15 5 times. It's also a 1 minute closure. Because 1 goes into 15 15 times. So you've got 3 different groups of potential traders. People that look at the 1 minute, people that look at the 3 minute, people that look at the 5 minute, 4, because you've got people that actually look at the actual 15 minute time frame, that are all going to hit the button and bundle into a trade at the point when structure is broken, which is going to push the markets in your direction if you've got things correct. Do you get what I'm saying? The psychology is that there's somebody out here who's not on the 1 minute time frame, bro. They're only looking at trades on the hour time frame. So for that reason, if you were sitting here and it was 8:59 and you saw a 1 minute closure because you're a 1 minute trader, you trade on a 1 minute time frame. When that closes at 9 o'clock, you're also benefiting from an hour closure. You're also benefiting from all the other time frames underneath that divide into an hour as a closure. And at that point in time, that's when you see the thing's going to start moving. Because that hour trader that's going to bundle big money in here, he's also slapped in a trade now. He's seen it as an hour. But at 8:59, he wasn't in the trade. At 8:58, he was in the trade. So synchronizing even your time with your close, like say for example, right now it's 9:13 and 33 seconds. I don't know where the market is right now in real life because we've rewound it a bit, okay? But let's go to real life and just see. All right. Now, if I was I'm here for argument's sake, and I'm looking at this, and I'm thinking to myself, what am I thinking to myself? Let me delete some stuff. I'm just trying to look at it very quickly, see what I'm thinking to myself. that we're trading within a range. We came from up here, we came from down here. Here's the high, this little level in here. That this market wants to go down, get to this yellow line some more. All right. Let's imagine, for argument's sake, that's what I'm thinking. I'm not saying that this is what I want to take. I'm saying that's what I'm thinking. Okay. I'm looking at the time. I'm thinking to myself, oh yeah, I want to take this. Like if for argument's sake, this here closes down below this wick here. Okay, giving me a little. I can't even say that because within the strategy, it's not broke this way. But just imagine it already indicated here, and now it was correcting, and then it was coming down here, and I was like, yeah, I'm waiting for the next 20 seconds for it to close, and in the next 20 seconds, it closes down here. Well, I'm going to be quite happy about that because I've not only got a 1 minute closure, but I've also got a 15-minute closure below structure. I've also got a 5 minute, 3 minute. That's going to give me more confidence to enter that trade here and place my stop, whether it's going to be above this little 15-minute high or it's going to be all the way above this little 15-minute high. But I've at least taken that and I've synchronized things with time. Look, right now we've just got a minute closure. All right. Here, we just got a minute closure. But this last candle to close was also a 15-minute closure. Because it's also at the 15-minute time frame of time. And a 15-minute closure, sorry, on time frame. Yeah, I can say that. All right. So that's something also, another bit of confluence, another bit of quote unquote trading knowledge for yourself. So when you're looking at things, you're thinking, oh yeah, you're proper eager. But if you just wait another 2 minutes, it's going to be an hour closure or 1 or 15 minutes. You might as well wait. You might as well just wait. You might as well just be like, no, I'm going to wait. Now, maybe that market starts moving away from you slightly. So instead of you getting in and it's 5 pips away from your stop, it's now 7 pips away. But who cares? You've got the extra confluence, the extra confirmation that it's also an hour close. Because let me tell you something. Let me say the worst thing is you hit that button at 8:58, starts going in your direction. And then before it gets to 8:50, 9 o'clock, it just starts going massively in the opposite direction. And you're just like, oh my days. It might still want to go in your direction. But it might, at 9 o'clock, some other orders came in and bundled the other direction for a little while. Could do. All right? Could do. All right? Could do. All right, so look at this market right here. We're going to zoom out. We're going to understand our bigger picture. Our bigger picture is that the market is potentially trading within these 2 red bands. All right? On the bigger picture, have a look at the big picture. On the bigger picture, we've got these. Let me zoom all the way out. Who knows why my yellow line's all bandy like this? I must have moved it by accident. Don't deal with them bandy leg ranges, all right? So, to be fair, this isn't the best line either. I don't know why it's even drawn like that. I think I might have moved it by accident, yeah? So like that is the bigger range between here and here. And at the moment, the market is just within this little red range. Okay, so we're at the top of that range in a premium. This whole red line up here is the premium. Let me get rid of some of these things. Don't need to be here. Don't need to be here. The top is this premium. And at the moment, within that premium, the market seemed, as I started the session, have gone sideways from here down to here, back up to here. And up here in this red area, and it's not just up here, to be fair, it's this, you split it into thirds. This whole third of this box is premium. This whole third of this box is discount, and in the middle is equilibrium. It's, yeah, who gives a damn? Obviously, we want to take the trade at the extremes, but you split it into thirds, all right? But let's get rid of that. Let's get rid of that. So at the moment, this market is in this orange box. It's in the middle of a range, which I'm not over the moon about. I don't really want to take a trade from the middle of this range. That's why I'm like, yeah, I don't want to take a trade from here. I'm not going to lie to you. I'd prefer to take the trade from up here, if anything, or at least if it starts to break outside of this range, maybe. But the point is this. Though I'd prefer to take that trade from the extremes, we are on a huge time frame. So there are still smaller opportunities which I might let slide and might say I'll still get into this trade. Why? Because I'm on an 8-hour time frame, meaning every candle is 8 hours in time. Realistically, for us, we want to be trading, looking at the overall what's going on the daily, even though we zoom out, but when we see what's on the daily, then we're looking at 4 hour, 1 hour, 15-minute, and 5-minute entries. Yeah? So even though we're here, my first flag is on a much bigger picture is at the middle of a bigger range, of a consolidation. So I'm not over the moon about it. It's not like, oh gosh, I'm itching. This is so fantastic. I can't wait. This is the absolute cutest girl in the rave. Yes, not really. All right. But within these time frames dropping down, it is still interesting. Okay, it is still interesting. And unfortunately, this wick that happened here becomes the last low before the highest point. I'd like to see a break of that indication. And then I'm going to start looking at it. So I'm going to put I'm going to right click, add an alert, crossing down like that. I'll also pop an alert all the way up here, crossing up if I'm completely wrong and it's in the middle of the range and it wants to do something else and cross up. That's it. I'm done for this. I don't want to get in any smaller than seeing a break of a 1 hour indication, like structure, when it's in the middle of a range. I'm not going to start going down to 5 minutes, like, oh yeah, it's doing something now, because it's in an area that it could do anything. It could go up or down on the bigger picture. So I want to get some proper confirmations. Break this 1 hour structure. Yeah. Or break this 1 hour structure. Yeah. I don't want to be in here just far-assing about. So when I start hearing my alert later on today, hopefully, this market would have broken the structure, give me some sort of indication. Now, though we are still in the middle of the range, at least I've got an hour break. Then I'm going to be waiting for some hour correction. Then I'm going to be waiting for some hour continuation. Or if I'm feeling really heroic, trying to get an entry here, which I probably won't be because we're in the middle of a range. My energy would change if we was up here. My energy would be a bit more like, bro, at the top of the range, it's a premium, boom, boom, boom. You know, maybe especially even more so if I saw a liquidity grabbed. Oh, lovely. I'd be, oh, yeah, liquidity's been grabbed and it's breaking structure. My energy would be like, I'm itching to get in for the sell. I'm not itching to get in for this sell. I'm just kind of like, we'll see what happens. All right. Let's go look at another pair. Does anybody want a particular pair they want me to go look at? Like for me, that's done now. That US 30 is done for me because I've got the alert in and it's going to ring when it does something. I don't need to look at it again. All right. Anyone got another pair they want me to look at in particular? Anybody got another pair they want me to look at in particular?
Not in specific, no.
All right. Let's go have a look at. We'll go look at, I was going to say Bitcoin. We'll look at Bitcoin afterwards real quick. All right. So this is our EJ. All right. And you can even see some scribbles in here done previously. And it looks like it's keeping to the scribbles, but we're not going to have one we made earlier. We're going to delete verifying. We're going to zoom out. All right. And remember what I said. I want you guys to get confidence in your own abilities. You know how to do everything that I can do in regards to strategy. Or the basic strategy. You do. Yeah. Now you need to start asking yourself, why am I not a gazillionaire from my trading yet? Ask yourself the question. Why am I not a gazillionaire, quadbillionaire, yeah, from the trade? In fact, I'm going to ask, Jivan, why are you not an absolute multi, or maybe you are, you ain't told me yet. That's why you're shooting them glossy videos.
Not yet.
Man's shooting them glossy videos. I see man with the braids all hanging down and them thing there. I see Jivan doing this thing. All right.
My guy.
So listen, so why are you not absolutely crushing your trading yet when you know the strategy inside out? Or not inside out, but you know the strategy. Let me not say inside out because it's recent.
Yeah.
Tell me.
I would say it's a number of things, but if I'm being honest with myself, I just say discipline is one of them.
Good.
Mm-hmm.
And elaborate on that. You know, what are you not disciplined?
I would say discipline in the sense where I know I've set myself a target where like every day I need to have a certain amount of screen time on TradingView, whether I'm setting trades, whether I'm back testing, whatever it is. So discipline in the sense where, you know, life, I'm sure all of our lives are very, you know, full.
Yeah.
So it's just finding the time sometimes to actually, even when I don't want to trade and look at the market, open it up, keep my mind fresh. You know, like how you were saying about staying on the horse. It's like right now, man's on a journey. And
life is life.
And it's like, yeah, and it's like the more I go on it and I keep refreshing myself on it, it just becomes second nature more and more and more. You know what I'm saying?
I like everything.
Why ain't I a millionaire yet? Because time is moving as slow as it is.
Okay, you know what I mean? Good answers. Very, very good answers. Man want to give it more time, but man have to work, or man got kids, or man got other things going on, or like, the hours, the 10,000 hours ain't been put in as yet, and the discipline ain't quite there yet. Whereas maybe you're disciplined with other things, you haven't quite maybe. And that's why Breakfast Club, in my opinion, is at least, like for me, going to the gym in the morning is like part of a routine. I roll up my bed, boom, 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 get in the body in the bathroom, something, and go to the gym. Because if I try to stay, I'm gonna go later on this evening. Bro, I'm not gonna lie to you. This evening's gonna start evening. Yeah, something's gonna come up. I have to run here. I have to do this. Little man's doing something else. Put man to bed. Or go. I got a quick run-ins to do, and I'm not gonna go. That's just me personally. Maybe someone else can go to the gym better in the evening. And so, therefore, Breakfast Club is like your gym. It's like
Part of a routine.
Part of the routine, where at least you can turn and say, I got another little bit of knowledge. If you watch something today that gives you a little bit of knowledge in any area, I'm not saying in trading, anything, it's just another bit of time that you've attributed to yourself to grow your brain. Because on a normal day, you might not get no opportunity to watch anything that's going to grow your brain. Yeah. So it's like you have to have, the best way to say this is that, we are creatures of habit. Like human beings are creatures of habit. Think about the things that you do. You do them out of habit. Man out here driving his car by habit. Sometimes I don't even know how I got home because I'm sure I was doing something else for the whole journey. Do you understand what I'm saying? Yeah. It's that we're creatures of habit, but the aim is to get good habits. Do you understand what I'm saying? Yeah. If we can get good habits apart from bad habits, smoking's a habit. Do you understand what I'm saying? Like other bad things that you do are habit. Junk food's habit. You know what I'm saying? But if we can get good habits, then at least then we can improve a little bit in certain areas of our life. But good answers there, G. Anybody else? Let's go someone else. I'm gonna pick somebody who can, I don't know, who can speak. I don't know if Marcus can speak. I like to see Marcus here every so often. Welcome, Marcus. I don't know if he can speak or he's working. I'm not sure. Can he? Can he not? Can he? Let's go and Jordan. Jordan's been making an appearance. Jordan, I don't know if you can speak, Jordan. I don't know if you can speak.
Yes, bro.
Good morning, my brother. Good morning. Good morning. How's it going? How is it going? He's gone. Can't hear you there, Jay. Maybe you got a little bit of bad connection, yeah? I can't hear you. Other Jay, Jason, well gone. Are you there? Are you there?
I'm here, my brother.
Yeah, tell me why aren't you collecting yet? Why isn't it you made gazillions yet out of the markets?
Life has been lifing. I've had to put a few things before the trading, but I've just been keeping myself primed. It's there in the waiting. I know whenever I go again, that's it for me.
And
I feel
remember,
like I'm
go on.
I feel like I'm nearly there. I've just
Good.
had to get this boxing out the way.
Yeah, that's done.
That's
Tick.
out the way. So I need to get myself another challenge, and I'm confident. My last time around, I had my account for I think nearly a month and a half or so, and I was flittering backwards and forwards.
Well, you didn't blow it straight away, which is still good.
Yeah, and when I did blow it, I was
Jason,
sort of angry. I was sort of angry with myself because it was a day when I shouldn't have been trading. I was having a bad day, and yeah, that's something I've got to work on, knowing when not to trade.
Great answer once again. Remember, my question isn't because I'm trying to make out like to say everyone who's trading is supposed to be quadrillionaires. The point I'm making is that there are other factors to this trading and trading success. And it can be all the things that people have said. Life, by having a bad day, blah, 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 blah. There's all of those factors come into play. You understand? So that's why it should give man hope, because you're like, because somebody has a better control of their mind than somebody else. Than maybe me. Better control of their psychology and their state of being. Maybe they're in a better place in their relationships at home, or they're zen. They're a bit more zen and they can sit down. Maybe they've managed in their time better than. Do you get what I'm saying? The strategy itself, just be like happy that you've like, right, this is a strategy that works. Because I've shown you the strategy working time and time again. You can pick a random pair right now, I'll show you the strategy playing out. Not at a certain time, when there's a certain this, when the stars align, just fundamentally. This is a strategy that works. Okay. So therefore, you now have to work as well as the strategy works. And that does take the things that I heard Jivan talking about, time. Get those hours in. They say 10,000 hours. Get those 10,000 in. Yeah, so that you can start saying the stuff like what Jason just said. He knows he shouldn't have been trading that day. He's having a bad day. Now he's experienced what happens when he's having a bad day and he jumps behind his laptop. Hopefully, because I'm telling you, just because you felt it once doesn't necessarily mean that that was enough of a burn. But hopefully, he doesn't do it again. Hopefully, when he's having a bad day, he's got strong enough will to say, I'm not even going to open my charts today because I'm just mad. I'm mad at this. I don't know, whatever he's mad at. I'm not going to open up my charts because taking it out on the computer is only going to hit you in the pocket. All right. But that comes from experience. That's not going to come from me telling you that. It's going to come from you experiencing. All right. So have a look at EJ, guys. EJ is here, and you know that bigger blue box in EJ, okay, is top of the range premium, all the way down here, bottom of the range discount. This is the pitch that it's trading in. And there's nothing saying it might just go off the pitch, start doing something else. But at the moment, in the back of my mind, I'm thinking to myself, this is an interesting area because we're nearly up to, or we may have just surpassed, I don't know, all-time highs. I think maybe we did, to be fair. Yeah, this market pushed up over there, made new all-time highs. Yeah. And potentially that wick there, grab the liquidity from above this little area. Potentially. Maybe wants to push up higher and do a madness. But I'm concerned because everything's very expensive in this shop. Yeah. So when I'm seeing this market come up to this expensive area, came up once, had a lovely reaction all the way back down to this bottom of this range, to the discount of this little white range. But then it wanted to go again, push back up. Boom, now we're back up into these levels. And I've seen another reaction, breaking, if I go to my 4 hour, some structure. All right. This is around the highest point. We're breaking structure, indicating, correcting, closing up this imbalance that was all in here, and potentially now continuing. Is this going to continue back down to this white line over here? Is it going to continue and break outside of this white line and start making its way down because we're in this premium blue box and we want to get all the way down to the discount of this blue box? These are the questions that I'm asking myself. All right. So look, have a look here. Like I said, we've seen this big push down here. Then we've seen a correction, closing the imbalance perfectly. Kind of market came up here, how the market's so efficient. The market was all the way up here, and for whatever reason, boom, we saw some big price action. We saw strength and speed pushing away from this area, breaking structure. And I'm on a 4 hour time frame, so this is significant, these little lows. Broke it. When it did that, it left a huge imbalance in here. Oh my days. Guys, good morning, good morning, good morning. God bless. I'm going to have to jump off the call. Just realized I've got a meeting at 9:30. But thank you for your time. We're going to catch this up tomorrow and we're going to get involved, yeah? Guys, good morning. God bless. I'm going to come off it, and I'm also actually going to close my meeting room, and I'll be back on at 12 o'clock, the meeting room, all right? If you want to drop back in. But guys, love
wait, why are we jumping back in at 12?
If you want to jump back in, I'll be watching something, just like how I normally.
Yeah, I'm live, but are we chatting or are you just gonna play?
Yeah, we can chat. But you know, if you chat to me, I'm gonna talk to you. So
I'll say that. 12 o'clock, I'm there.
Love, guys. Sorry, I just seen the time, 9:32. That's why I'm
Thank you.
Bye bye.
All right, bless.